Hey friends, welcome back to the channel. If you're new, welcome. And if you are a returning subscriber, thank y'all so much for coming back. I do appreciate it. If you're new, hello, my name is Shalise. I'm a mother, a wife, a worker bee, the creator behind this channel. I'm just documenting our journey to financial freedom, specifically with dividend investing videos. Now we do invest in the retirement accounts. We do budget and all of that. But I really just craft my content around this type of, these types of videos. Remember, I'm not a financial advisor or a fiduciary or a guru. I'm just filming our journey. I'm just like you. I'm in the trenches investing, sharing the good, the bad, the ugly. When the markets are up, when the markets are down, I'm just filming my journey. So hopefully that will encourage you to start so that you see me doing it. You know that you can do it as well. So today I wanted to talk with you guys. Before I continue on, make sure you like, share, and subscribe. We're almost at 20,000 subscribers. And beware of scammers, fake pages, WhatsApp. I try to get a lot of it out. I try to report it, but they keep coming back. So if you see it, make sure that you report it for me. Remember, I'm not going to DM you, email you, or ask you for money or how to buy crypto or trade stocks for you or anything like that. Okay. So remember, when in doubt, send me an email, mommytradertube@gmail.com. But let's talk a little bit about dividend danger. So I want to share some of the things that I did, my husband and I, when I say I, that we did so that you guys don't have to make the same mistakes. Now, I've made videos before talking about financial mistakes we made, money mistakes we made, and I mean, we did a lot, okay? I'm talking about I cashed out a 401k, payday loans, overdraft and credit cards and bank accounts. I mean, you name it when it comes to money, I did it. And I share that because I want you guys to understand we all start somewhere, right? I did not fall out of the sky and just get to where we are and without any problems or without any hiccups or anything like that. It took a long time. Remember, we are on year 10. This year makes year 10 of this journey. 10 years is a whole lot of time, and I wanted to share with you guys some of the things that we did so that you don't have to make the same mistakes. And I want some of you guys who have been investing, I would say for at least 5 years, 3 to 5 years, share down below. We have a lot of new subscribers here, a lot of new beginner investors, and we want to make sure they don't make the same mistakes that we did. And so let's talk a little bit about some of the dividend dangers that we did, and hopefully you don't fall into these traps. Okay, so the first thing that we did was, I move my face down, was try to trade dividend stocks. Now, when I first started investing, I did not really understand the difference between trading and investing. I think when you look it up on like the internet and you're trying to learn how, you're probably going to get more trading based videos versus investing based videos. And I've learned a long time ago, I've tried trading. It is not for me. Now you may see my name, Mommy Trader. My name stands for me as a mother trading in generational curses for generational blessings. But I know Mommy Trader sounds pretty cool if I was an actual trader. No, I've tried trading. I've cried over it. I don't have the stamina for it. I don't want to constantly be on the phone. And I don't even understand the deltas and the thetas and all of that. I think I was telling someone if I ever learned, I would need like a hand holding one-on-one personal type of experience, but I just leave it alone. But I did not understand, the difference. And so, you try to trade dividend stocks. You figure, well, I'll just make some money trading it and I'll get a dividend. No, 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 guys. Okay. That is one of the worst things you can do. I would say if you're a beginner, and again, I'm not a financial advisor, but if you're a beginner, you shouldn't be trading at all because there's a lot of risk associated with it. You may have to be subjected to, I think it's the pattern day trader rule or something like that. And I always believe that you should have like the foundational investing aspects first before you, because I think trading is more advanced versus investing. But yeah, trying to trade dividend stocks, no, 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 no. I lost a lot of money and it was a great lesson, right? The losses are lessons, right? Because you know what not to do next time and you can tell other people it's okay to buy and hold into good dividend stocks and good dividend funds for the long term. If something changes with them, you can sell them. But trading is like buying and selling in a short period of time. And again, it's just not for moi. Okay. Let's come down to number two, dividend danger. And now this is something, whoo, I could talk about this topic for a long time. Chasing dividend yields. So you find a nice dividend stock you like, you find a nice dividend fund you like, and the yield is like 20, 30, 40, 50. There are some out here that have like almost 100%. And the thing that I ask myself now that I wish I would have asked myself then is, why is a company or a fund paying you out all of that when they could be reinvesting those profits into themselves? And so I'll give you a great example. I've talked about TSLY for the longest. Let me bring it up in Robinhood because this is a great example for my husband and I. So I've talked about, we bought TSLY, I think last summer. I was not on board with this at all. But again, when you're in a relationship, you have to learn how to compromise. And this is, oh my goodness, relationships and money. We could talk about that too. But I've been with my husband for 20 years. We'll be married for, no, 21 years this year. We'll be married for 19 years in June. So we've been together a little while. And one of the things you learn is to compromise, and you just got to just let people see. And I was not with the TSLY because, yeah, it pays a great dividend. But if you look at the performance of it, it is just performing terribly. And what's the point of getting a dividend if it's just not performing well? And yeah, I know it's an option income, yield max type of fund, but I just did not like it. And we got, some dividends, but we lost pretty much half of our position. You see, it's at $9 now. We bought in initially around like $16 or something. So pretty much half of our position, and it just wasn't worth it. The thing I like about realty income is that though it's down, there's a direct correlation. It's the interest rates. Realty income has still been performing well with their earnings. They just acquired another company. Their dividends have gone up. They've maintained their dividends and increased it. And I really do love the management of the company. So I can hold out for that because I believe in that. This is just personal preference, guys. Okay. I state this in my videos often. Your portfolio is yours. This is ours. I'm not built for TSLY, and I'm glad my husband saw the light and we are out of this. Okay, but I wanted to bring that up. Like when you're chasing yields and it looks great because you see that big dividend, you don't realize that you could be losing a lot of your capital in return. So let's come down to the next one, number three that we did, not tracking progress. Now, I've actually done this with our budget in the past. Like you just kind of wing it, right? You kind of think you have an idea. You see the little alert pop up on your phone, like, oh, you received a dividend, and you kind of just leave it there. But one of the dangers of not tracking your progress, and it's not just even with dividend investing, I think just any type of financial tracking you should be doing. You should be tracking your credit score. You should be tracking your budget. You should be tracking your expenses, your savings, your retirement investing, your dividend investing. You should be tracking your finances. And I'm telling you, by not tracking it, my husband and I, excuse me, guys, my husband and I were always on different pages. He thought one thing, I thought another thing, because there was no central location to see, okay, how are we doing with our dividends? Is our income going up? How much are we making this month? Which security paid us, this month? How much did we get paid from said security? We don't know. We just kind of, we just pull it out of thin air. And a lot of the times we were really off the mark. So I always tell people, track your progress. You don't have to be fancy with it. If you don't feel comfortable with a spreadsheet, use a notebook, a plain notebook, and just write it out every month. You can use a journal or a planner. You can use a spreadsheet. You can use trackers. By the way, I have all of those available up on my website, mt1finance.com. I did the work for you. So if you want to go grab those, you can, so that you can start tracking your progress as well. But it's so important, like your net worth, your retirement accounts. If you have savings for your children, do you have an estate plan? Like if you have a side business or a side hustle, you definitely should be tracking all of the expenses and all of your income and all that, but you should be tracking your progress, right? If the credit bureaus and the banks and the mortgage companies are tracking you, you should be tracking your own progress as well, okay? So let's come down to number four, too many dividend stocks. This is a dangerous one because, and I know some of you, and I've talked to some of you who have had like 70, 75 different dividend companies. I mean, long list, right? I've been there. Okay. I get it. You want to have your dividends from all over. and you want to be diversified, like diversify upon diversify. But there is, you can go to the extreme. And like I said, I've been there. And one of the mistakes and the dangers of it is that you can have too many dividend stocks thinking, you know what, I'm going to get all these dividends. But the secret sauce in high dividend payments is your share sizes. That is the secret sauce. Build your share sizes. You could pick one or two or three. You could pick five if you want. And just start out there. And then when you reach your share size goal, then you can branch out more. But I think it helps so much to have like a few to focus on and just build, build, build. That is your focus. And I'm actually thinking of making an adjustment to the investing challenge. I've been getting some questions about this, and I actually really like the idea of really picking, like, you guys vote on one pick for an entire quarter. And that quarter will focus on building our shares in that specific security. Oh, my battery is on. Let me plug my battery up, guys. Not editing out. Just hold on. Give me a second. We family, right? I'm plugging this in because I don't want this to go off. Okay, guys. But I'm thinking of doing it with the investing challenge. You guys have been really telling me that, sending me a lot of private emails and messages, and I really do like that idea because it'll help you to build up your share sizes. That is the secret sauce, is you hire more share sizes. You build them share sizes up, you'll get more dividends. And then last but certainly not least, again, just things that we did that we've learned is no strategy or goal. And I've realized I have strategy wrong. I'm here in Canva, which by the way, I do love. If you are a YouTuber, I definitely think you should be using Canva. Not sponsored, but Canva is awesome. But not having a strategy or a goal, let me tell you something. When you're first starting, you don't really have to have this button down. But if you've been doing this for at least a year, you should start thinking about, like, why am I doing this? Or what's the end game? Or what's my plan for all of this? Like, why are you doing all this? Do you want to retire early? Do you want to take a sabbatical and maybe explore another opportunity? Do you want to travel? Do you want to have, something set aside in case you get sick, like a rainy day fund, separate from your emergency fund? Maybe you want to buy a house. I mean, what is the strategy with dividend investing or any kind of investing? Like, what is the goal of all of this? And our goal is to build up our dividend account so that we can slowly start to withdraw these dividends when we get into our early retirement years. So again, think about it. You don't have to come up with it, like I said, when you first start. But after a year, you should be thinking about, like, what is the end game for all of this? So okay, I want to invest, heavily here. I want to do this here versus over there. So, again, when I first started, and I would say the first like 2 years, we didn't really know what we wanted to do. We were just trying to get our money on track. We were trying to get everything, on the right page with our finances, including each other. But having a strategy or a goal is motivating, number one, because and when you track, remember a couple of steps up, when you track it, you can see your progress. And number two, it'll convince you that it works. And so have a strategy. So just to review, make sure you have a strategy or a goal. You don't need to have too many dividend stocks when you're first starting. Focus on building your share sizes. Track your progress. I cannot explain that enough. Please track. Don't chase yields. You want to make sure you believe in whatever you purchase because it is your account. And then you don't want to trade. You want to buy and hold in what you believe in. So guys, let me know down below if you made any of these mistakes. Are you finding yourself walking into one of these pitfalls? If there's something I didn't mention, list it down below so that we can help a lot of the people who are new to avoid making those same mistakes. Again, guys, please make sure you like, share, and subscribe. Thank you so much for watching. And until next time, I'll see y'all in the next one. Bye-bye.